Hello everyone. Hello everyone. You okay? Hi everyone. You okay? Can you hear me? How's it going, guys? You okay, everyone? Can you hear me? Can you hear me? All right. Let's give a few minutes so that others can also join in. And we will exactly start at 6:35 Sri Lankan time. Let's start exactly at 6:35 Sri Lankan time. Okay. So that gives us another 3 more minutes for us to start. But I'm audible. Yeah, everyone. Well, we've been looking at questions throughout. If I'm not wrong, this is my fourth class for my revision. Ever since last week, we started off with revision. This is my fourth revision class, correct? Right, brilliant. Just a moment. Some students have issues in joining. Okay, I'm gonna say this is my fifth class. Okay, 1, 2, 3, 4. There you go. Already 5 classes are done. And here we are. Uh, I think we've been looking at entirely focusing on past paper questions, and that's what it is all about. So from last week to this week, what is the progress? If you ask me, last week I would have told you, okay, fine. If you had started to study, you would definitely score above 75 to 80, and you can crack a prize. But if you ask me today, on the 15th of February, just after the Valentine's Day yesterday, where you're waiting for and you're trying to um, effectively make use of it, and today you are here, well, you can still pass. I'm not saying no, you can still pass. But if you just start studying now, uh, I don't think you will score well. Okay, probably you can score, you can just, inch closer to your pass mark of 50, or perhaps maybe about 50 to 60. That's it if you start. Unless otherwise, you're super, super, super smart and uh, you can properly master the paper. Having said that, we've done questions, we've done Harbin, we've done Frisco, we've done a cash flow kingdom question, we've done YGym, everybody. Um, a message, few messages that I've been getting for a while is that Zian, we're finding a bit difficult to do this question by the name Clarion. Clarion is once again a past paper question, and I agree it's a bit of a confused question. It can probably confuse you. So there were too many requests for me to do Clarion. So I thought, okay, why not? We can start off with Clarion. Like I told you, I'm going to continue our session, revision session, like last week. We're going to meet continuously for the next few days. So today we meet, tomorrow we meet, Saturday we meet, and also Sunday we meet. So that continuation is going to come by. Okay. Right. With that said, few things. Students who missed the revision already, if you had missed the revision already, you can still go and access our YouTube channel. Our YouTube channel, PPIM's ACCA PPIM's YouTube channel, will have all the recordings free of charge. So let me share that across with you. So this is our so that is our revision link. Our revision link will contain all the everything, all the subjects from BT to AAA. We do the revision entirely, and you could see everything there. Okay. Anyway, having said that, Clarion was a question that I was asked to do. Yeah, I know Clarion looks a bit challenging, but let's do it together. Okay. Right. Super. So So very simple, like how it is, how like how I'm getting messages. Okay, so do this, do that. If you can send me any questions like that, I can still do it in my next revision. But I've got a list to be done, so I can still continue doing that. Okay, there you go. We are here. Clarion. Clarion is a past paper question. It's a very detailed question. If you ask me, will we get to this depth? Probably the adjustments will be less, but to this depth you can be tested. But the most important part with Clarion is we've got a cash flow extract to be done as well. So basically, we're going to do the P&L, we're going to do the financial position, and we are going to do the cash flows as well. So we've got multiple requirements, and we're here to work around it. Everybody on track with me? Everybody? Yes, give me an A. Everybody on track with me? Super. Well, let's go to the requirement. As always, let's go to the requirement. Very simple. We know how we are going to do it. First, we go to the requirement and then we go back to the notes. Based on the notes, we do the workings. Based on the workings, we prepare the financial statements. That's how it works. So we are going to take the same route. We're not going to make any changes there. Right, super. Prepare the statement of P&L for Clarion for the year ended 31st March 2015. That's the first requirement. And prepare Clarion statement of financial position as at 31st March 2015. That is requirement number 2. And finally, prepare the extracts of the statement of cash flows for Clarion. In respect of cash flows from investing activities only, ignore investment income and financing activities. Okay, there you go. So 3 requirements. We are going to work around all these 3 requirements. So before that, let me just put across my Excel on screen so that I can work parallelly. I hope you've been working on the. I'm sure you've been working already on the Real ACCA platform. But everybody, you can see both my screens, right? You can see my screens, right? That is Excel and the question. Do you see both? Okay, well done, superb. Let's start off. In the exam, Tushwa, we're going to leave about 40, 50 lines. We come right to the bottom. We are going to say workings. As always, we do the workings based on the notes and then go back to the question. Okay? Super. The following trial balance relates to Clarion as at 31st March 2015. Shares, retained earnings, loan notes, plant and equipment, rights of use plant, accumulated depreciation, investments through P&L, inventory, trade receivables, bank deferred tax, trade payables, environmental provision. Actually, this question covers a lot. Standards are covered in depth a lot. Lease liability, revenue, cost of sales, admin, distribution, loan note, interest paid. This is a suspense account, bank interest, investment income, probably because of this investments to P&L generating investment income, current tax. But nothing new. We've seen these adjustments before. Earlier, we've gone through these adjustments earlier. Let's start off, okay? Right. We've got 5 notes. I'm giving you 5 minutes. It's 6:42 until 6:47 for you to read the notes on your own and try to construct an answer on your own. So when I do it, you will know, okay, fine, this is what I got it right, this is what I got it wrong. Okay? 5 minutes for the 5 notes. Okay? Your time starts now. Go on. And once you're done, give me a done. Okay, shall we start? Right, let's start. Okay. On 31st March 2015, 1/4 of the 8% loan notes were redeemed at par, and 6 months outstanding loan note interest was paid. Okay. The suspense account represents the debit entry corresponding to the cash payment for the capital redemption and the outstanding interest. Okay. So during the year, what has happened at this at 31st March 2015, you've had loan notes, but 1/4 was redeemed. Okay. And when they redeemed it, okay, the suspense account represents the debit entry corresponding to the cash payment. You paid cash, so you credited your cash. But instead of debiting an account, you put up a suspense account with the cash payment for the capital redemption and the outstanding interest. So you went and debited the suspense account and not the loan note account. IFRS 9. Okay, I've told you this earlier. Now I'm telling you this again. Any payments in relation to the liability, the financial liability, will be set off against the loan itself. Okay. The standard requires any payments in terms of the liability to be set off against the liability itself. So basically, you have to set off against your loan note, but you went and set off against a suspense account. Now you need to remove that. No, you need to obviously remove that. Correct. So technically, you will remove that. How much is that? 5,800. Okay, keep that in mind. IFRS 9 is an important accounting standard for FR, and you need to know, you need to clearly know and understand how to account for the liability in a section C question. What I require my students normally to do is simply put up a T account. Okay, when you're getting a question like this, I want you to simply put up a T account. With a T account, you can get your answers. Let me copy paste the T account so that it's easy for me. Why doesn't that copy? Paste. Okay. So I'm going to put up a loan note account. Okay. And simply what you do in the exam when it comes to section C, just take the brought forward figure. Just take the brought forward figure. What is the brought forward figure? We know the brought forward figure is given in the TP. Loan note brought forward is how much? Everybody, how much? Guess how much is the loan note brought forward figure? Superb. False, 20,000. That's right. So I'm going to take my 20,000. Now, point to keep in mind, any payments in relation to the liability should be set off against the liability. Correct? Now here, they say the suspense account represents the debit entry corresponding to the cash payment for the capital redemption and the outstanding interest. Okay. How much do they say? How much do they say is your capital redemption amount that you put it in the wrong account, suspense account? 5,800. Correct. So this 5,800 has to be obviously set off against the loan. So I have to credit cash when I'm paying. I have to debit this. So that has to be my 5,800. Correct. In my current year, they also say my loan note interest paid is 800. So credit cash, debit this account once again, 800, whatever I paid. I have a charge to the PNL. How much am I charging to the PNL? My interest rate is 8%. Therefore, equals 20,000 into 8%. I have to charge 1,600. As such, my total 21,600. 21,600. I carried forward 21,600 minus this 15,000. If you know this, how to get this? In the sense, if you know where to charge my P&L finance cost, whatever I pay, if you can set it off against the liability, you will get the answer simply in the exam. That's all you need to know. Boys, was that clear? Are we clear with that? How about Amna? They also say capital redemption and the outstanding interest, Amna. So you have paid interest of 800 already out of your 1,600, no, Amna? So 5,000 plus 800, 5,800, correct? Okay, super. Yeah, so 5,800 includes a component of interest. So that's what my total interest is 1,600. No, that's what I'm bringing another 800 here. Clear? Super. Understood, sir. No problem. Well done. So, point to keep in mind, this is going to go to the balance sheet. This is going to go to the P&L. Everybody out there, did you understand how to tackle it? Everybody there, you understood how to tackle it? Yes or no? Okay. Yes. Lovely. Okay. Now, point to keep in mind, reserve you account for a liability. Now, this is a common area your examiner comes up in the exam. So, we've done questions before, and there you go. And there was a request, sir, can you do some questions on IFRS 9 and explain us further? No problem. I've got some questions for you. I'll do that. Okay. During the revision itself, I'll do it. Okay. Super. Number 2, property, plant and equipment. Included in the property, plant and equipment is an item of plant with a cost of 14 million. However, the plant will cause environmental damage, which will have to be rectified when it is dismantled at the end of its 5-year life. Okay, at this point itself, you should know what is this? What are they talking about? What are they talking about? At this point itself, you need to know what are they talking about. IAS 37, that's right. Dismantling cost, decommissioning cost. No problem. That's right. Decommissioning cost. Okay, now you know. Working number 2, they're talking about decommissioning cost. Okay. The present value discounted at 8% on 1st of April 2014, your year end is 31st March 2015, of the rectification is 4 million. Already it's carried that 4 million present value. The environmental provision has been correctly accounted for, properly accounted. However, no finance cost has yet been charged on the provision. If you've been in my class, I would have done a question under IAS 37 called bubble limited. Bubble limited, we spoke about a plant and a decommissioning cost. In total, it was 3,005. 3,005 every year we have to calculate interest, correct? Super. Now, what has to happen is decommissioning cost for, it's a plant, is it? There you go, plant. 5 million was the cost of the plant. Well done, Amla. That's correct. What you said is correct. 5 million, and then it was 4,000 at a discount rate of 8%. We had 3,005, and every year we calculated. That's the question. Okay, directly done. Now what we are going to do is we are going to calculate the unwinding discount. Superb. Yes, sir. I just did it before class. Okay, super. Good for you. Right. So 4,000, correct? My discount is 8%. So equals 4,000 into 8%, 320. That's my unwinding discount, which I'm going to charge to the PNL. So there you go. My PNL will become 320 finance cost. And my environmental provision will go up by 320. Super. Working 2 was straightforward if you knew what to do. No depreciation has been yet charged on plant and equipment, which should be charged to cost of sales on straight line basis over 5 years. No plant is more than 4 years old. Okay, no plant is more than 4 years old. You have been given a straight line depreciation policy of 5 years. It's a confusion. Forget about whatever is not relevant. 5 years depreciation, working number 3. Depreciation, straightforward, plant. Useful life is 5 years, therefore 77,000 is the cost over 5. That gives me equals 77,000 over 5, 15,400. Okay. So far we good? Let's go further. Working 3 done. Working number 4. The right of use plant was acquired on 1st of April 2014 under a 5-year lease with an initial deposit of 2.3 million and annual payment of 1.5 million on 31st March each year. Okay, the moment you see this right of use, we are talking about lease, correct? I've told you a few things that you need to extract from the question. The first thing that you need to extract is going to be the fair value, minimum lease payment, finance cost. That's it. And then, of course, I've told you to put up a lease payable account, you will get the answer very simply. That's all you need to know. If you are able to get this, you will get any lease payable question, any lease question sorted. Fair value. What is the fair value of the asset? The right of the use was acquired on 1st of April 2014 under a 5-year lease with an initial deposit of 2.3 million. You are paying 2.3 million. And then they say, and an annual payment of 1.5 million. So your minimum lease payment is going to be 1,500, but we need to know how many months. The present value of the annual payments under the lease, excluding the initial deposit, was 5.7 million. So technically, the cost is going to be 5,700 plus 1,300, 7,000. Sorry, 2,300, boys. Sorry. Oh, why did I get it wrong? 2,300. So that's 8,000. I'm going to pay 1,500. Okay. Every year. But for 5 years, under a 5-year lease. Correct. So I'm going to pay 1,500 equals 1,500 into 5 years. But apart from that, you need to also keep in mind, I've already paid 2,300. So basically, I'm paying 9,800 in total. Therefore, my finance cost will be 9,800 minus 8,000, 1,800. Are we clear? Are we clear? I just want you to get this only for me first. And then, of course, you need to get the depreciation right, as always. Let's go further. The lease has an implicit interest rate of 10% and the right of the use plant has been correctly capitalized, no problem. There, the lease liability in the trial balance above represents the initial liability less the first annual payment. Okay, superb. All good, nothing to worry. Let's get going. Okay, I need to calculate my depreciation. My depreciation would be my fair value 8,000 over my lease period 5 years, 1,600 per year. Okay. Now, what we are going to do is we are going to put up the lease payable account. My lease payable account, my brought forward, always when you're putting this, your lease will be calculated excluding your initial deposit. So please remove your initial deposit, which is going to be equals 8,000 minus 2,300, 5,700. Please get that right. It's very similar to your loan liability account. Whatever you charge, whatever you pay. Your cash payment is going to be minimum lease payment, 1,500 every year, correct? And then, of course, charge to the PNL, how much you're going to take to your PNL. Your PNL is at 10%. So every year it's going to be at 10%. We know that. So equals 5,700 into 10% gives me 570. Well, first thing that I should have asked you, I'm sorry, how many years has it been since we acquired the plant, and for how many years more I should be doing my calculation? How many years gone? How many years gone? How many years gone? 1 year gone, says Amna. So for how long should I calculate? If 1 year gone, so for how long should I calculate? 4 years remaining, correct? Out of 5 years, 1 year gone, 4 years remaining. So for how many years more should I calculate? I have to calculate only till second year. Tushwar, super. I have to calculate only till second year. First year gone means until second year. If 2 years gone means I have to calculate till third year. If 3 years gone means I have to calculate till fourth year. Here, first year gone, so I have to calculate until my second year. So I'm not done. I'm going to do my brought forward again. So carried forward, my carried forward will be 6270 minus 1,500, 4770. And I've got my brought forward. Copy, paste 477. Copy, paste, copy, paste, copy, paste. No, I need to get my figures here. So I have my total. There you go. 3747 is my carry forward. Guys, you need to give me a few minutes. Okay. Yeah, I know we've got the prayer break to be done. So I'm going to give you the prayer break. But before that, let me quickly take the current liability and non-current liability. Okay. My current liability, non-current liability. My current liability will be equals 1,500 minus 477. 1,500 minus 477. 1,023. My non-current liability will always be 3,747. There you go. Right. We can take our prayer break and continue with what we have to do further. Okay. 10 minutes prayer break. Now it's 7:05 until 7:15. Okay. Prayer break and then we are meeting, boys. Bye-bye. All right, boys, let's start. Everybody with me? Everybody with me? Oh, okay, lovely. So here, lease payable, straightforward. We've done this calculation before also. Uh, and finally, I need finance cost. Finance cost is obviously 570. So there you go. Everything that I require, I have got it from here. Correct? Correct? Understood? Everybody understood? Hello? So, so I'm done. I can get going. I can get going. Can I? Third adjustment is done. Now I'm going to go forward, work on my fourth adjustment. Okay. Super. My fourth adjustment says the investments through PNL. The investments through PNL are those held at 31st March 2015 after the sale bill. Okay. Look at that. After the sale bill. Okay. There has been a sale. After the sale only, they have given us the investments. They are carried at their fair value as at 1st of April 2014. However, they had a fair value of 6.5 million on 31st March 2015. So working number 5, we've got investments, in other words, financial assets. Fair value is 6,500. Correct? Okay, lovely. During the year, an investment had a carrying amount of 1.4 million, which was sold for 1.6 million. Investment income in the trial balance above includes the profit on the sale of investments and dividends received during the year. If it includes, do you have to do anything about it? If it includes, do you have to do anything about it? Yes or no? If it includes, do you have to do anything about it? No, you don't have to do anything about it. But then again, this fair value increase, is it incorporated yet? No. The fair value is 6,500. The book value is 6,000. So book value is 6,000, fair value is 6,500. Therefore, you've got 500 to the P&L because they're taking any investment gain to the P&L. Are we clear? Does that make sense? Does that make sense? Okay. We've looked at this earlier. Nothing to worry. It's very straightforward. Okay. Adjustments done? No, one more adjustment to go. My working number 6 would be a provision for current tax for the year ended 31st March 2015 of 3.5 million is required. The moment you see it, taxes, nothing doing, very simple. You put up 3 T accounts, correct? T account number 1, income tax account. T account number 2, tax payable account. And T account number 3, deferred tax account. All right, done. 3 T accounts done. Now what do? You take the brought forward figures. To take the brought forward figures, you have to go to the trial balance. You go to the trial balance, current tax brought forward, it has 400. So brought forward 400. Deferred tax brought forward 2,700. 2,700, right? Brought forward 2,700. That's right. And now let's go to the notes. A provision for current tax for the year ended 31st March is given as 3,500. So debit income tax, saying tax payable 3,500. Credit tax payable account, saying deferred tax, sorry, income tax 3,500. The balance on the current tax is the trial balance above represents the under or provision of the tax liability for the year ended 31st March 2014. At 31st March 2015, the tax base of Clariant's net assets was 12 million less than their carrying amounts. All right, there you go. They say your carried forward is 12 million, which requires a deferred tax of 25% to be made. So therefore equals 12,000 into 25% gives me 3,000. So equals 3,000 equals 3,000. I have a 300 that I'm going to take to my income tax account. So I credit this, I come back, I will debit this, correct? I'll say DT, deferred tax, 300. So equals total 4,200. So brought forward is on the credit side. Oh yeah, my brought forward is on the credit side, right? I'm sorry, my brought forward is not on the debit side. My brought forward is on the credit side. So my brought forward is on the credit side. If it's on the debit side, I take it to my debit side. If it's on my credit side, I take it to my credit side. Got it? Got it? Got it? Got it? Everybody? Everybody got it? Everybody got it? Everybody got it? I want everybody to respond. So there you go. 3,800, 3,800, and charge the PNL. If you've already got 3,400, that means your answer is correct because that's what I'm getting. I believe my answer is correct. For 3,500, 3,500, and carried forward 3,500, which I take to the balance sheet. And here I'm gonna take 3,000. Are we clear? Are we clear, everybody? Everybody, are we clear? Okay, with that, I'm done with all my workings. All my workings are done. All my workings are done. All my workings are done. Straightforward, nothing to worry. What do we do? What do we do? We don't go back to the notes ever again. We don't go back to the notes ever again. Correct? We don't go back to the notes ever again. Okay, super. Now, what do? We start working on the P&L and balance sheet. Okay, we've done enough of questions together. Do you want to do this on your own, or you want to do together? Shall we do together? Shall we do it together? Or you want to try it on your own? Say what? With me, overlooking your calculation, overlooking your workings, you want to do it or you want me to do it? Students who want me to do it on own, okay. That's a very good step to take, right? So we can try it alone because yeah, of course, you've got the answers, so you can try it on your own. Okay. Let's do it until profits. Get your profits. Only profits, okay? So you can go back. Clariant's statement of profit or loss for the year ended 31st March 2015. Okay. Right. Start working on the profits. I want everybody to work on the profits and give me the profits figure. Correct? All right. I'm giving you about 5 minutes. You can start getting your profits. These are the workings you might need. But in case you want this sheet, I'm going to share it again with you. I've already shared it with you, but let me share it again so that in case you want to refer it, you can go through it. Okay, your time starts now. You get 5 minutes and then we will do it together. All right, go on. Done. Everybody done? Okay, I'm gonna start doing as well, right? Revenue. Okay, I'm getting an answer. Okay, what's the profit? What's the profit you get? So I can also see if you're getting the same profit. Okay, Amna says 5,180. Let's work with 5,180. If anybody gets a response, you can have your profits with you. You can tell it to me as well. Revenue, did we make any changes, Amna? Did we make any changes to revenue? No. So revenue is going to stand at 132,000. No changes there. And then cost of sales, Pushwa, what's the profit? Cost of sales is going to be 88,300. Did we make any adjustments to that? Yeah, we have to add depreciation, says Amna. Okay, let's go down. Let's check for depreciation. Depreciation of plant 15,400 plus depreciation of the lease 105,300. I hope I got it right. If there are any changes, please let me know. That gives me my gross profits. This minus this 26,700. Correct? Are we clear? Are we clear? Other incomes? Let's take decommissioning separately. Other incomes? We have 500 here plus any other income. Go back to the workings. Any other income? Incomes. There you go. You have another 500 here plus 500. Anything else? No, that's it. There you go. Other incomes 1,000. Admin expenses. Our admin is at 8,000. So why haven't you taken decommissioning cost? Decommissioning cost is unwinding discount. So I'm going to take it as a part of my finance cost. Okay. So it's a part of my finance cost. So admin expenses equals 8,000. Did we make any changes to admin? Nothing here. Nothing. Depreciation is done. Nothing. So all good. 8,000 directly I'm going to take. No changes there. Selling and distribution cost. Or just distribution. I'm sorry. Distribution costs. Distribution cost is standing at 7,400. No changes there as well. Therefore, my operating profits will be equals 26,700 plus my other income 1,000 minus 8,000 minus 7,400, 12,300. Everybody, so far all okay? Did you get this until this point? Did you get your answer, everybody? Yes or no? Everybody got it, right? No problem. Now I've got finance cost. Finance cost. I already have loan note interest 800, and then I have a bank interest of 300, correct? So I have an 800 and 300 separately. So equals 800 plus 300. I've got an 800 plus 300 with me. To this, what are the finance costs that I need to add? My total charge, the PNL is 1,600. Out of this 1,600, 800 is already there. So I have another 800 to add. So I'm adding that 800. Okay. Anything else? Let me go down. My decommissioning cost of 320. Any other interest? I've got a 570 to the PNL of lease. Therefore, 570 has to come by, which didn't come. So 2790. 2790, 2,790 is my finance cost. How did I get it? My 1,600 from my loan, correct? Plus 300, which is already there. So I forgot the lease 570, so my answer is wrong. Okay, and then I take the unwinding 320. That's okay, Amna. Now we've added it. Plus 570, my lease, from my lease, I've got 570. Please, please, please don't miss this out. If you miss out, you're gonna lose 1 or 2 marks, I know, but still be a bit careful, guys. Be a bit careful. Are we clear? Are we clear? Everybody? Everybody, are we clear? Yes. Now I've got my profit before tax, which is 12,300 minus 2790, 995.10, and then I've got my taxes equals, I come right to the bottom, 3,400. Therefore, my profit after tax would be 9510 minus 3,400, 6110. Bell, did you get this, everybody? Yes or no? You're safe if you got this. Yes or no? Did you get this? Well done, Faust. Superb. Okay, that's okay. Guys, but you understood how we do it, right? Guys, you don't have to get it right. I mean, that's fine if you don't get it right. But first, you need to understand how to get it. That's very important, okay? It's a process. It's a process. But, from last week to this week, there should have been learnings. From this week to next week, you have a different set of learning. So that has to happen. And this week, I'm going to share more technical articles. I'm going to share more examiners articles with questions, whatever we are doing, we're going to look into that as well. We are creeping into the last few weeks of our exams. I know there's about 20, 15, 18 days to go, but we're there, nothing to worry. Not 18, about 16 days. We're there, nothing to worry, okay? Take it easy. Why did I? All right, now we can move on and work on our statement of financial position. Okay. Okay. I'm sorry, I forgot it. I'll send that across as well. Okay. Right. Clarions statement of financial position as at 31st March 2015. What do we have? We've got assets, below that non-current assets. Non-current assets, we have plant and equipment and rights of asset use. Okay. Now let's come back. Plant and equipment, leased plant. So we've got plant and equipment, right? 77,000 equals 77,000 minus our depreciation. We've got 15,400. That gives me 61,600. But I also have accumulated depreciation. That's right. For plant and equipment, I have accumulated depreciation of 19,000, which needs to be deducted. So 42,600. And then I've got leased plant. Leased plant is going to be 8,000 minus accumulated depreciation. Do we have any? No, nothing from here. So I'll come right to the bottom. Do I have anything below? 1,600. Therefore, I have 6,400. So total put together, I will have 49,000 property, plant, and equipment. And then I shouldn't forget, I've got investments. Financial assets. So investments, financial assets. Now the value has gone up and I've got 6,500. The fair value is 6,500. So I'm going to make it 6,500. Therefore, my total non-current assets is standing at 106,500. I'm sorry. 55,500. Okay. I've got current assets. When you take current assets, I have inventory. No adjustments to inventory as far as I can remember. Therefore, my inventory will be 11,700. I've got trade receivables. As far as I remember, I did not make any changes to my trade receivables either. So it's going to be 20,500. Anything else? Cash. Bank, it's a liability. Investments can we classify under current assets since we are using it for trading purposes? Can. Not holding till maturity. You can. But let me go back. Can. But taking them under non-current assets, it's also not wrong because when you're holding investments, probably the initial classification, if you look at financial instruments, I would have given you a point. The initial classification is irreversible. You cannot reverse it. So technically, it could have been you're going to hold it for a long run. If your intention is going to be for more than 1 year, but here, yes, you've sold it, but we do not know the intention. So technically, it is more prudent, more likely to come under non-current assets. You've sold a part of it, but not everything. But we are still unsure about the intention. So I've taken it under non-current assets. If you want to take it under current assets, you're saying not holding till maturity, they've sold a part of it. So there's this confusion as to if they're going to hold it or not. So, okay. Brilliant. Okay. Now coming back, your inventory, trade receivables, do you have anything else? Do you have anything else? As far as I can see, nope, nothing. Okay, no. All right, super. Equity, share capital, your share capital, we did not make any changes there. I can remember it crystal clear, but I can take my total. Total assets 87,700. Your share capital will be 35,000. There you go. The share capital is 35,000. And then you don't have share premium, so you have retained earnings. So I'm going to take retained earnings. No revaluation. Surprisingly, this question does not have any revaluation either. Your retained earnings is 4,700. To this, you have your current year profit, which is 6110. I added 10,810. Therefore, your total, that is total equity, will be 45,810. So last few adjustments, I've got non-current liability and current liability to work around with. So I've got my non-current liability. If you take my non-current liability, on top of your head, you know, there is loan notes. So we did some calculations and we got some figures, if I'm right. How much did we get? 15,000. There you go. And you know, on top of your mind, you've got lease liability. Now, while doing this, it has to strike you. It has to strike you because, you know, we've already done this, right? So that's what you require a lot of focus. NCL 3747. Correct? Lease liability. And then I have, what do I have? Deferred tax. There you go. Yes, environmental provision. That's right. I've got deferred tax as well. Equals, come down. My deferred tax is 3,000. Environmental provisions. My provisions will be, we did that calculation. Oh no, we didn't take the total. Okay, so I've got my environmental provision here 4,000 plus 320 because it's going to go up, correct? So equals 4,000 plus 320, 4,320 because my liability goes up. My finance cost is charged here. Do I have anything else? Do you see anything else? Do you see anything else, boys? I don't see anything further, so I'm going to take my sum. 26,067. All okay. Brilliant. Okay. Superb. And then I have my current liabilities. If you take my current liabilities, do I have trade payables from here? Yeah, there you go. We've got trade payables. Our trade payable balance is 9,400 equals 9,400. We did not make any adjustments straightforward. We did not make any adjustments. We've got bank overdraft. Okay, say Ramna, bank overdraft. So much is our bank overdraft? 1,900. Lease liability, that's right. Equals, come down, 1023. Anything else? I don't think so. I think we are good to go. Total equals sum 12,323. Therefore, my total equity and liabilities, hopefully it balances. 12,323 plus 26,067 plus 45,880, 84,200. Oh, 87,200. What are we missing? 84,200, 87,700. What are we missing? Okay, we're missing something. In the exam can happen. Okay, we have to take tax payable. Okay, there you go. Okay, there is a tax payable that we need to take. We've missed that out. So tax payable. Well done, guys. That's a good show. It's a good one. tax payable is 3,500, 87,700, 87,700. Does that balance? It balances. It will always balance if you get it right. Give me a moment. Oh, 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 oh. Yeah. And Asma got a bit annoyed with me, I think. Tax, tax. Zian, tax, please take tax. Okay, there you go. Fine. We've taken tax. And now it balances. It's okay, it's okay, it's okay. 87,700, 87,700. Does that balance? It balances. Are we clear, boys? Everybody, are we clear? Everybody, are we clear? Yes or no? Okay, that was straightforward. That wasn't as difficult as we thought it would be. But are we done? We are not done yet. Okay. I'm gonna also work around the next part of the question. So where's my Kaplan kit? There you go. The next part of the question requires me. Okay, where am I stuck here? Just give me a moment. My video is a bit stuck. My Zoom is stuck. The second part of the question requires me to do my cash flow extracts for 3 marks, correct? But they want me to only do prepare the extracts of the statement of cash flows for carry-in for the year ended 31st March in respect of cash flows from investing, ignore investment income and financing activities. So investing and financing activities giving me 3 marks, easy 3 marks in the exam. So I'm not gonna leave that as well. So Clarion's statement of cash flows for the year ended 31st March 2015. Okay, so I'm going to work on cash flows from investing activities. From investing activities and cash flows from financing activities. So obviously, I'm going to start off with cash flows from investing activities. Okay, tell me, do we have any purchases? Do we have any purchases, investing activities? So investing activities, I'm going to talk about my property, plant, and equipment specifically. Do we have any purchases? Yes, says Zamna. Including the property, plant, and equipment is an item of plant with a cost of 14 million. So you purchased. So purchase of PPE equals minus 14,000. That's it. That's it. That's it. Don't forget, investing activities, you've got investments as well. And what happened during the year, an investment which had a carrying amount of 14 million was sold for 16 million. In other words, sale of investment that you have. So sale of financial assets, you've got 1,600. So that is an inflow. Apart from that, I don't see anything. So cash flows from financing activities, finally. cash flows from financing activities, you're looking at changes in share capital and liability. There were no changes in share capital, so technically you're going to look at liability. In terms of liability, what are the changes you have? What are the changes you have? They say they want us to ignore investment income. Suppose you can ignore investment income. They want us to ignore investment income. If not, I understand. Okay, you can take it as part of the investments. They want us to ignore it. So what's happening? In terms of your liability, they say 1/4 of the loan was redeemed, meaning paid. There was cash payment for the loan. So loan repaid 1/4, the total value is 20,000. 20,000. Finance cost comes up 20,000. So therefore, you will take equals 20,000 into 1/4. 20,000 into 1/4 only. Oops, why did I make an error? Which is 5,000. That's going to be a negative cash flow because it's going to be a repayment. That's it. That's it. Any other repayments? Any other repayments? Lease. Well done, Asma. You've got a lease, and basically what's happening? So you acquired a plant for 2,300, so you have a negative cash flow. Plus, you're making 1,500 annual payment. From this, you will set off your interest. So equals your lease payments. You have a negative 2,300. Okay, to which you will also add your 1,500 in the current year. So 2,000. So basically, I have to make this negative. I have to make this negative 3,800. But there is finance cost of 570, which needs to be set off. So 3,230. That will be your total lease payments during the current year. Very straightforward. Your cash inflows and outflows are counted with your statement of cash flows. So there you go. A very detailed question. I agree that it's a detailed question, right? But we can, of course, work through this question like how we did it today. Right. With that said, once again, boys, during the revision phase, 1, 2, 3, 4, 5, I've done 5 questions with you. I'm meeting you again for another question tomorrow sharp at 6:30, like how we're meeting today. The plan is to meet you tomorrow, Saturday, Sunday, like last week. We are going to continuously meet. So yes, with that said, we wind up for the day. Good night, guys. I hope you understood the question. Start studying. Work around. Asma, bye-bye. Work around. We still have time. See you all soon. Bye-bye. Take care. Well, we'll do it tomorrow. Can we do in ACCA platform? We can do it tomorrow. Tomorrow, a question on the ACCA platform. Okay. Bye.